we have been highlighting how the entire real estate space in the last 2 years, especially from the second half of 2020, has seen such a significant uptick and has seen such a smart and sharp recovery. In fact, most of the indicators in terms of sales data, in terms of construction data, in terms of affordability, in terms of rising employment, a lot of these are actually auguring quite well for the entire uptick and upturn seen as far as the real estate cycle is concerned. This is something that analysts look at extremely favorably, and this is something that is expected to go ahead and ensure the job creation, unemployment rates also are quite favorable rather. Now, when you're talking about this particular phenomenon, we've seen a whole host of brokerages go ahead and turn quite bullish as far as realty in India is concerned. It is now the turn of Neelkanth Mishra of Credit Suisse. Remember, they've gone ahead and done a deep dive on the entire real estate space within the Indian market. They are quite positive on the Indian real estate space, and they've highlighted a whole host of reasons, whole host of factors to keep note on, especially on this particular theme. Now, when you're talking about what exactly Credit Suisse is saying, they're saying that the value of construction is expected to grow due to growing size and improving quality. They also believe that the time correction in the real estate space is getting over, and inventory in major cities have now started dipping. Remember, this was one particular issue that was plaguing the real estate space, very high inventory that actually led to a lot of smaller developers folding up. We also understand that the rising need for non-residential spaces is also acting as a trigger, especially with warehousing, etc. That is now being a significant demand driver as far as real estate space is concerned. Neelkanth indicates that cycles do exist in urban real estate, and the payback for land values overshooting 2006 to 2013 was stagnant prices that we saw between 2013 to 2019. And what he is saying is that the sales volumes are rising mainly due to improving price signals and better affordability. He's saying that the sales volume are rising also due to rise in household savings, something that typically acts as a significant driver for real estate demand, and falling mortgage rates. Remember, in India, affordability for real estate is at a multi-decade high on the back of the fact that interest rate levels are at decadal lows. According to Neelkanth, many sectors benefit, so it will boost demand for inputs such as Havells and Asian Paints. Also, significant demand would be seen for cement companies, so he likes names like Ultratech Cement. The mortgage industry will definitely benefit and will help create jobs. One thing that's been lagging as far as the entire Indian economy is concerned, and this will also help staples going forward. Godrej Consumer and names like Dabur are something that he is quite positive on.